the Securities and Exchange Commission begins its second Capital Market Committee meeting of the year today. Our issues bordering on the implementation of a 10-year Capital Market Master Plan, as well as others relating to the capital market and the economy, would be discussed during this meeting. Now, joining me now to preview this meeting is the MD CEO, Cowry Asset Management Limited, Mr. Johnson Chukwu. Good morning, Mr. Chukwu. Thank you very much for joining us.
Good morning, my pleasure.
Right, the CMC is holding a second meeting for the year today. What are the key issues that will be deliberated upon by the CMC, especially given the current state of the capital market, both on the debt and equity sides?
Well, I think the primary topic of discussion will be on reviewing the roadmap, the 10-year roadmap running from 2015 to 2025, to determine how far SEC has gone in implementing or executing the roadmap, the Capital Market Development Initiative. I think that's what will be the major discussion at today's meeting of CMC.
And for you, how far would you say that the committee has pushed on the Capital Market Master Plan, which is a 10-year plan?
Well, a lot of improvement has happened in the capital market over the past 2-3 years. And if I have to itemize some of them, look at the capital market community has introduced the direct cash settlement scheme that has eliminated the issue of abuses of customers' funds by some weak operators. There has been the issue of dematerialization of certificates. People no longer have to carry their certificates around. Once you buy shares, the shares are transferred in a logic form to CSCS, Securities, for the custodian for shares in the country. There have been the issue of the introduction of a number of products. Take, for instance, the issue of Chukwu bond or Chukwu instruments. We have seen in the past couple of years, we've seen introduction of Asian traded funds. We've introduced real estate investment trust funds. So these are some of the initiatives and development that were embodied in that capital market development strategy or plan, and they are now being implemented. So if you cast your mind back and look at how far we've gone, where we are coming from, there's been a lot of strengthening of institutional framework. There's been a lot of improvement in regulation, and these are the factors that are bringing investors' confidence and attracting foreign investors into the Nigerian market.
Okay, now, between the last meeting in April and the one holding now, there has been some sort of activities in the domestic debt market, especially with commercial paper issuance following the tapered rate in the treasury bills market. What is the outlook on corporate bonds issuance?
Well, in the short to medium term, there are a lot of companies that are coming to the bond market. A lot of companies are actually preparing to access capital in the bond market. So we've seen a lot of uptick in corporate bonds. These things are, like you pointed out, we've seen a decline in interest rates. And as you know, nobody wants to borrow long term when interest rates are high. Now that we've seen a dampened interest rate environment, a lot of corporates, and I know we as Cowry are involved in a number of them, are involved in raising money from the capital market. We're going to see that until if the central bank say they adjust, that they increase rates, and you see an interest rate environment that is punitive to long-term borrowing. But if the current interest rate environment subsists, a lot more corporates are going to come to the capital market. And you will see, as we are seeing now, a lot of improvement in activities in the bond segment, the long end of the debt market. That is the bond segment, unlike what we saw in the CP market, the money market segment, when rates were quite high and nobody wanted to go long in their debt instruments.
Now, apart from listing by introduction by Notre, we have not seen any equity capital market activity, not even the much anticipated MTN listing. Are there risk factors to equity capital raise at the NSC now?
Well, not really different risk factors other than the fact that in an environment where the secondary market is weak, and like we've seen in the beginning of this year, it was only last year we saw recovery in the secondary market. This year we've seen, year-to-date, we've seen negative year-to-date return. So at short periods, when some stocks are actually trading below their intrinsic worth, issuers are not willing to come to the market to list their shares for the fear that, one, the market may not take those shares, two, the market will underprice those shares to the point that they will no longer reflect the intrinsic worth of the companies. And three, that you have investors apathy and the investors are not quite aggressive or there's no liquidity in the market at that point. So what we are seeing now is that we've seen a weak, relatively weak secondary market. And you can have a vibrant primary market at a period when prices in the secondary market are not reflective of the underlying assets. If you look at what has happened in the secondary market so far, you will observe that some stocks are actually trading below their net asset value. And there are stocks that are trading at very low PE multiple. Those are not conditions that encourage companies to come to the market. Companies come to the market at a point when their prices are quite high, and they can come in the primary segment of the market at some level of discount to encourage investors to buy. That's not what we have today. Prices are quite low, and low prices in the secondary market will not allow for very active primary market.
Okay, the equities market, can be said to have been on a prolonged under the weather. What would be expected to trigger a change in sentiment?
Well, that would be what happens in the political environment and then the economic policy of the government. As we all know, in 2016, the economy was in a recession. We came out of a recession in 2017 with only a growth of 0.83%. First quarter 2018 was only 1.95%. For investors in variable income assets, they are looking at what is the outlook of the macroeconomic environment. At a period when you see a very timid recovery in the economy, people are not going to bet on the returns of quoted companies. So in such an environment, you're not going to see a bullish equities market. Once we come out of our current political environment, heightened political risk, and then we put together right economic policies that will drive economic growth materially, then investors will be interested in the equities market or equities instruments. Otherwise, periods of uncertainty, investors will rather underway their portfolios in equities and underway them in fixed income instruments.
Well, coincidentally, an association of exchanges was launched yesterday. In your view, how strategic is this union to enhancing the Nigerian capital market development?
Well, the key thing is that right now we are really seeing a lot of instruments listed in multiple exchanges, both locally and then internationally. We see some Nigerian instruments listed outside the country, and we also see some instruments listed both in the Nigerian Stock Exchange and FMDQ. So the key thing that we must have collaboration. We must ensure that instruments listed across exchanges are appropriately priced across those exchanges, that there is no disintermediation or arbitrage that is a result of lack of information between the exchanges. I think those are some of the reasons why the collaboration among the exchanges is taking place.
And do you think this will help in dispute resolutions quickly?
Yes, absolutely. Once you eliminate abuses, once you eliminate information arbitrage, then the issues of dispute will be reduced to the minimal level, and that will also make it easier to resolve any dispute that may occur.
Will it be a game changer for market operators in the case of listing in the exchange?
Well, not exactly. The game changer will come from the macroeconomic environment, starting from the political environment to the macroeconomic growth or the GDP growth. And then you looked at the sectorial performance of different sectors where some of the companies are listed. Then you now drill down to the performance of individual corporate organizations or corporate entities listed. These are major factors. So if you're looking at the top-bottom approach to what will lead to material improvement in the market, you have to take it from the political environment through the macroeconomic environment, through the sectorial, the policies that affect each of the sectors of the economy, and then you now look at the management of each of these entities.
And what is your outlook on Nigerian capital market?
The outlook?
Mm-hmm.
Well, to actually put the outlook in proper perspective, you have to look at different segments of the market. The bond market, the equities market, the derivatives market. But let's just take the two critical components, the bond market and the equities market. The equities market might not see any major rally this year until the end of the year, until after the election. But I think there will be bargain hunting opportunities as we move towards the election period when the market would have suffered material adjustment. So for those who are strategically minded, they will come into the market around November, December, and then take advantage of the earnings period that will come in February, March, as well as the impact of post-election, particularly if the election is successful. So on the bond market, I think there's been a lot of shift of resources, economic resources from the equities market to the So the bond market will continue to see some bullish activities while the equity market.
All right. Thank you very much for your time, Mr. Chukwu. Johnson Chukwu is the MD CEO, Carry Asset Management Limited.